What if I told you the entire future of the crypto market, the next massive boom or the next catastrophic crash, could come down to the decisions of one single man? Not a committee, not a shadowy government agency. Just one guy at his computer with a track record of both spectacular wins and history-making wipeouts. And here's the thing, he's not hiding. He's not some secret billionaire offshore. His playbook is out in the open, in front of everyone. He's practically daring the world to watch what happens next. This isn't a conspiracy theory, it's the reality of how one person with one wild vision could set off the financial chain reaction that shakes the entire system. Trust me, if you care about your money, your investments, or even just understanding what actually drives the market these days, you need to watch this right to the very end. Hey, I'm your buddy investor, and if you're new here, I'm all about helping regular people cut through the hype, the noise, and the market jargon so you can actually reach financial independence. I've spent years breaking down the real mechanics behind investing, and I don't sugarcoat things. If there's a storm coming or a golden opportunity, I want you to be the first to know. If you like having a friend in your corner, hit that subscribe button now because I promise you, this is the kind of channel that could change your financial life. Let's get right into it. Why does this one guy matter so much, and how did he get this kind of power over the entire system? The guy I'm talking about is Michael Saylor. If you've ever heard the word Bitcoin in the past couple years, chances are you've seen his face, heard his voice, or read his tweets. He's the billionaire brain behind what's probably the boldest, most controversial bet in modern finance. But before he was the self-appointed king of crypto, Michael Saylor was just another tech whiz in the dot-com boom. Back in the late 90s, he took his company, MicroStrategy, public. He was riding high. For a brief, shining moment, his net worth on paper soared above $7 billion. But you know how these stories go. When things go up too fast, sometimes the crash is even harder. In 2000, the SEC accused him of cooking the books, and in a matter of days, his fortune evaporated. Imagine losing over $6 billion. Just like that. Most people would never recover from that. But Saylor? He didn't run. He didn't hide. He kept going, kept grinding, and for 2 decades, his company quietly survived, making boring but profitable enterprise software. No headlines, no drama, just steady, safe business. But then the world changed. You remember 2020. The pandemic hit, panic set in, and central banks all over the world started printing money like there was no tomorrow. Suddenly, safe didn't feel so safe anymore. Inflation was on everyone's lips. Saylor looked at the mountain of cash sitting in his company's accounts and had a realization. If he just let it sit, it would rot. Lose value. Slowly at first, then all at once. Here's where things got interesting. Saylor decided to do something no public company CEO had ever done before. He took $250 million, $250 million in cash, and used it to buy Bitcoin. And not just a little. He went all in. People called him crazy, reckless. Some said it was genius. Over the next few years, he doubled down. Again and again. Instead of using MicroStrategy's profits to invest in safer, more traditional assets, Saylor borrowed money, sometimes at 0% interest, just to buy more Bitcoin. By the time you're watching this, his company holds over 500,000 Bitcoin. To put that in perspective, that's more than the US government, more than China, more than almost any entity on Earth. At current prices, that's over $50 billion worth of digital gold, all controlled by one company and essentially by one man. Let's pause and really take that in. Imagine if Amazon decided, tomorrow, to put every spare dollar into gold and kept going until they had a bigger stash than Fort Knox. That's the kind of scale we're talking about here. But here's where the real twist comes in. MicroStrategy, the company, doesn't really operate as a software business anymore. Sure, it still sells products and services, but those are rounding errors next to the Bitcoin stash. It isn't a trust or an ETF or a hedge fund. It's something entirely new. Saylor has turned the company into a kind of Bitcoin acquisition machine, powered by the market's own belief in him. Here's how the machine works. He sells stock or issues bonds to raise more cash. Then he uses that cash to buy more Bitcoin. When Bitcoin's price goes up, so does MicroStrategy stock. When the stock goes up, it gets easier for him to raise even more money, so he can buy more Bitcoin. And the cycle continues. The whole thing becomes a feedback loop, a kind of perpetual motion device. At least, as long as everyone keeps believing the story. Now, if you're thinking, that sounds a little risky, you're absolutely right. The entire model is built on confidence. It's built on momentum. And history tells us, whether you're looking at the South Sea bubble, the dot-com crash, or the recent collapse of FTX, belief is an incredibly powerful fuel, but when it runs out, the results are brutal. Let's put a human face on this. Michael Saylor isn't the first person to try something bold, but he is the first to do it at this scale, with this much leverage in full public view. You might even call him the Warren Buffett of Bitcoin, except instead of "be fearful when others are greedy," Saylor seems to be saying, "be greedy, always, and buy more." There's something deeply inspiring about that kind of conviction, but also something a little terrifying. Let me tell you a quick story. Back in the early 2000s, Saylor watched his empire collapse overnight. He could have just left, blamed the system, retired in obscurity. But he rebuilt, slowly, methodically. He's the kind of guy who seems to thrive on high-stakes pressure. That's the kind of personality that can make you billions or lose you everything. So why are investors piling in even knowing all this? Why not just buy Bitcoin directly, skip the middleman? It's all about belief. They believe Saylor is the ultimate diamond hands, that he'll never sell, no matter what. They believe he can play the market better than anyone else. They believe his financial engineering will give them better returns than holding plain old Bitcoin. And so, the price of MicroStrategy's stock now trades at a massive premium to the actual value of the Bitcoin it owns. Think about that. People are willing to pay double just for the privilege of riding along with Saylor. But here's the question nobody wants to ask. What happens if that belief gets tested? What if, for the first time, something cracks? Let's break down exactly how this could play out, step by step. First, Saylor's company raises cash, usually by selling convertible bonds. These aren't just regular loans. They're special. If the stock price goes up enough, the lender can convert their loan into shares. That's great for the company. If things go well, the debt just disappears, swapped for equity. And for investors who aren't allowed to buy Bitcoin directly, think big pension funds, insurance companies, this is their backdoor way in. But there's a catch. If the stock price doesn't rise, or Bitcoin cools off, those bonds don't convert. The debt stays on the books, and eventually, it comes due. And with billions already borrowed, the pressure is enormous. Let's get concrete. MicroStrategy's average purchase price for its Bitcoin is around $67,000 per coin. That means, at current prices, they're sitting on a fat profit. But if Bitcoin drops, say, to $40,000 or $25,000, the value of their stash could suddenly be less than the amount they owe. That's when the panic starts. Investors rush for the exits. The stock, which has a history of moving twice as fast as Bitcoin, imagine a 10% Bitcoin drop turning into a 20 to 25% stock crash, becomes a hot potato nobody wants to hold. And here's the part nobody likes to talk about. If the machine ever stops working, if Saylor can't raise more money, or if he ever has to sell even a little bit of Bitcoin to cover his debts, that breaks the story. And when the story breaks, the premium vanishes fast. Suddenly, instead of a forever holder, the market sees a forced seller. Instead of a genius, Saylor becomes a warning. Think about it. In every bubble, it's not the numbers that trigger the crash. It's the moment people realize the story can end. So how close are we really to that edge? Right now, MicroStrategy's market cap is over $100 billion, with around $8 billion in debt. The company's holding is worth about $50 billion at today's prices. That sounds like a cushion, but as we've seen in crypto, things can move fast. If the price drops far enough, for long enough, Saylor's options shrink. The moment comes when he might have to sell just to stay afloat. And that's the nightmare scenario. The guy known for never selling is forced to do the unthinkable. That's the crack that could ripple through the entire market. If the loudest Bitcoin bull in the world becomes a forced seller, what do you think happens to everyone else's confidence? Let me give you another real-world analogy. Imagine you're in a crowded theater, and someone whispers, "Hey, I think I smell smoke." Most people stay seated, trusting the crowd. But the moment one person jumps up and runs for the door, the stampede begins. Saylor is that guy. If he blinks, even once, the whole theater could empty out in seconds. And here's something even the pros sometimes miss. Saylor's debt is mostly non-recourse. That means if he defaults, lenders can only take the Bitcoin itself, not his other assets, not the software business. But that legal firewall doesn't stop the psychological domino effect. If Saylor is forced to sell, it's not just a business story, it's the collapse of the narrative that's been holding up billions of dollars in value. So, is this all just doom and gloom? Not at all. In fact, the wild part is, the same structure that makes this model fragile on the downside also makes it powerful on the upside. When belief is strong, Saylor's flywheel can turn a small price increase in Bitcoin into huge gains for investors. That's why the stock has outperformed even Bitcoin itself during bull markets. It's like riding Bitcoin with leverage, but without calling it that. But let's be real, leverage is a double-edged sword. It can turn your small wins into huge wins. But when things go wrong, it magnifies the pain. So what can we learn from all this? Should you rush out and buy MicroStrategy stock? Should you swear off Bitcoin forever? The answer isn't that simple, and that's exactly why you're here. Here's what I want you to take away as your buddy investor. First, always look beyond the hype. Markets run on stories, not just numbers. But stories can change overnight. If you're ever tempted to follow a crowd, stop and ask yourself, what would happen if the hero of this story suddenly changed his mind? Second, be wary of models that only work in one direction. If your plan needs everything to go right every single time, that's not a plan, that's a gamble. Make sure your own portfolio has safety nets and diversification. Third, remember the lesson from Warren Buffett, only when the tide goes out do you discover who's been swimming naked. Right now, Michael Saylor looks like a genius. But as Buffett himself has shown, the best investors plan for every possible future, not just the sunny days. And finally, don't let this story scare you out of the market. Instead, let it motivate you to keep learning, to keep asking questions, and to make decisions based on your own research, not just someone else's conviction. If you found this breakdown helpful, or if you just appreciate having someone talk to you like a real person, not a Wall Street robot, go ahead and subscribe now. This channel is all about giving you the tools to build real, lasting wealth, no matter what's happening in the headlines. But before you go, here's where it gets even more fascinating. Because if you think this is the first time markets have hinged on confidence and narrative, you're in for a surprise. There's a pattern, a set of red flags and psychological triggers that almost always shows up before a big market crash. In my next video, I'll walk you through exactly what to watch for so you're never caught off guard. Don't miss it. This is what always happens before a market crash. Trust me, you'll want to see this before you make your next big move. Thanks for hanging out with me today. Stay curious, stay motivated, and remember, financial independence isn't about timing the market, it's about understanding it. See you in the next one.